Hello friends, I welcome you to the next lecture on Indas. In this lecture we are going to deal with construction contracts. Indas 11 and International Accounting Standard 11 deals with how to deal with construction contracts. So we are going to discuss how to do accounting for construction contracts in the books of the contractor. So this standard does not prescribe how to do accounting in the books of the customer who is getting the construction work done, but the standard only prescribes how to do accounting in the books of the contractor who has undertaken a construction contract which has been granted to him by a customer. Okay. So what are we going to discuss in this particular lecture? We are going to discuss about the objective of the standard, what is the scope of the standard. We are also going to discuss about different types of construction contracts. We will learn about combining of construction contracts and segmentation of construction contract. We will also learn about what is revenue in a construction contract. So this is what we are going to deal with in this lecture. Before I go into the objective part, in a construction contract normally there are two parties involved. A customer who wants to get some construction done, and you have a contractor who is going to complete the construction work on behalf of the customer. So a customer and a contractor are going to enter into a contract, and this contract is for construction of an asset. The asset can be a road, it can be a building, it can be a bridge, it can be a nuclear plant, it can be a transmission line. A transmission line which is used to transmit electricity from the power generating unit to the substation, from the substation to the villages, or it may be a dam, or it may be a hospital, it may be a prison, or it may be a big building, it may be a big hospital. So we are talking about contracts for construction of assets, and you have two parties: the customer who wants to get the asset constructed, and you have the contractor who is going to construct it for a consideration on behalf of the customer. Okay. So how do we deal with construction contracts in the books of the contractor is what we are going to discuss in this standard. The standard does not talk about how to deal with construction contract in the books of the customer. Okay. So now, in the case of a construction contract, contractor may commence a contract, let us say in the current accounting period, and the contract may complete in some other accounting period. So the contract is taken up, contract starts in a particular accounting period, it may end within the same accounting period, but in most of the cases construction contracts are long period contract. That means they will continue for a period more than a year. That means if construction work starts in the current year, it may not end within the year, it may end in some other accounting period. So what may happen is, if you are showing the profits only in the year of completion, there will be a mismatch. Construction activity is carried over a period of time, and if you are showing profits in the year of completion, what may happen is you are showing only profits in the year of completion, but you are showing nothing in the year in which the work was done. So this can be a mismatch. There can be a mismatch between the result and the activity. That means the result is not shown in the year of activity. So that is why the standard requires us to follow the percentage completion method, in which case we are showing results in the year in which the activity has been done. That means if some construction activity has been done during the current year, some of the profits have to be shown in the current year instead of showing all the profits in the year of completion. Okay, so that is a basic problem in construction contract. See, in construction contract the problem is that the work starts in the current period, ends in some other period. So we have to match the result and the activity. That is the most important requirement of the standard. So the standard actually talks about allocation of revenue and cost. When to recognize revenue relating to the construction contract, in which year to recognize the cost, when to recognize profit. So that is what this standard is going to talk about. How to allocate costs to the periods in which construction activity has been done. So that is what is the objective of the standard. Now, scope of the standard is, the standard shall be applied in accounting for construction contracts in the financial statements of the contractors. That means we are excluding accounting for construction contract in the books of the customer. So it's only going to talk about how to do accounting for construction contract in the financial statements of the contractor and not the contractee. Okay. And second, the standard does not deal with, let us say, construction work has been done, we have done some billing on the customer, we have contractual right to receive cash from the customer in exchange for the services provided to him. If there is any impairment of these receivables, such impairment is not covered by the standard, it is covered by Indas 109. Okay, so this is not within the scope of the standard. Next, let us see the definitions which are discussed by the standard. So what is a construction contract? Construction contract is a contract specifically negotiated for construction of an asset or combination of assets which are interrelated, interdependent in terms of their design, technology, function, ultimate use. Sometimes the construction contract is for construction of a single asset, or it can sometimes be a combination of assets, a group of assets, and these group of assets are sometimes closely interrelated, they are interdependent in terms of their design, technology, ultimate purpose, functionality, etc. I have given some examples here. Examples of a single asset is construction contract for construction of a road, bridge, building. We can say these are individual assets for which a construction contract can be entered into. Then you have combination of assets like refineries, nuclear plants. See, a refinery can have multiple assets, and these assets are interrelated, interdependent in terms of their design, technology, function, use, etc. So it is not one asset, it is a combination of assets which we construct when we are constructing a refinery. When we are constructing a nuclear plant, it is not a single asset, it is a group of assets or complex piece of equipment. So construction contract may involve construction of a single asset or a group of assets which are closely interrelated. Next, construction contracts also includes services which are directly related to construction activity. Example is the services of project managers, architects, etc. So if you are providing service directly related to the construction activity, then that service is also considered as a construction contract only. And contracts for destruction, restoration of assets, or restoration of environment after destruction of the asset, such contracts are also going to be covered by this standard. Okay. Next, what is a fixed price contract? So we can say it's a contract in which the consideration for the construction work is fixed. That means the contractor knows in advance what is the consideration he is going to get for doing the construction work which is agreed in the contract. That means the contract price will be fixed by the contract. Okay. And normally what may happen is, in such cases you can have some escalation clauses. See, escalation clauses will be there because, see, when the contract is agreed, the contract price is based on prevailing prices of material, labor costs, etc. And as the contract progresses, the price of material, the labor costs may change, and the contractor would expect some reimbursement for the customer because of the increase in cost of material, labor costs, etc. So in such cases, the contract may provide for a clause called as escalation clause, based on which the contractor can claim some additional amount because of increase in price of material, labor costs, etc. So in case of fixed price contract, there can be some escalation clauses as well. Okay. Now what is a cost plus contract? In a cost plus contract, for the construction work which the contractor is doing for the contractee, the customer is going to reimburse the contractor for allowable expenses or agreed expenses. So the contractor and contractee will agree what are the expenses the contractor can incur for construction of the we can say the asset, and the contractee is going to reimburse those costs. He is going to reimburse the allowable expenses, and the contractor can also charge some fees. That means his margin, profit, or he is going to get a percentage of the allowable costs as some margin or as some profit, or he can charge some fees in addition to the cost which is incurring for construction of the asset. So such contracts are called as cost plus contracts. Now there can be some contracts where you will have mixed features. Example is a cost plus contract, but there is ceiling. That means, let us say the contract says whatever cost the contractor is incurring plus some margin he is going to get, but there is a maximum cap beyond which the contractor cannot ask the customer an extra amount. So in such cases, sometimes a contract can also have some mixed features as well. Now, how to apply the standard? The standard requires you to apply the requirements of the standard to each contract separately. That means we have to apply the standard to each contract separately. So for each contract, we have to prepare a separate account, we have to maintain separate accounts, and we have to apply the requirements of the standard to each contract for doing accounting for the contract for the purpose of financial statements of the contractor. Sometimes the standard has to be applied to a part of the contract also, not the entire contract, but to a part of the asset or to one of the assets of the contract. We have to apply the requirements of the standard. So when will we do that? Let us see in our future lectures. Next, segmenting of contract. Now what is the segmenting of contract? Sometimes what may happen is, there is one contract between the customer and the contractor, but the contract covers number of assets. That means it is not for one asset, but it is for number of assets. There can be situations where you would have to apply the requirement of the standard to each asset, even though the contract covers multiple assets. So you may not be applying the requirement of the standard to the contract, you will be applying the standard to an individual asset which is covered by a standard, which is covered by a contract. So that means there can be a single contract covering multiple assets, but the standard is not applied to the entire contract, it is applied to one of the assets which is covered by the contract. When will we do that? This is called a segmentation of the contract. Okay. Now when will we do that? When will we apply the requirement of the standard to individual assets rather than to the entire contract is what we are going to discuss here. So when separate proposals have been submitted for each asset, separate negotiations have taken place for each asset, the customer and the contractor was in a position to accept or reject individual assets which are covered by the standard, which are covered by the particular contract. And third is cost and revenues for each asset can be identified separately. So when these conditions are satisfied, even though you may have one contract for multiple assets, the standard will apply to individual assets rather than to the entire contract. That is called as segmentation of the contract. Example is given here. There is a contract between a customer and a contractor to construct 10 petrol pumps. So the customer wanted, we can say the customer is a petroleum retailing company or it is an oil refinery. It wants to set up petrol pumps all over the country, and it has granted a contract to a contractor to construct 10 petrol pumps at 10 different locations in the country. So if you go in the background, you may find that separate tenders were submitted by the contractor to the customer for each petrol pump. Separate negotiations have taken place for each petrol pump, and the revenue and costs can be measured separately by the contractor for each petrol pump. In such cases, we can definitely say that each petrol pump is a separate asset. Even though 10 petrol pumps are covered by one single contract, you would have to apply the requirement of the standard to each petrol pump separately. Okay. So even though it is one contract, actually we are having 10 different contracts. Okay. So we have to go to subject matter of the contract and to see whether it is a single asset or these are multiple assets. So we are going to apply the requirements of the standard to each pump set, each pump we can say petrol pump. And the contractor has to maintain accounts for each petrol pump separately and recognize profits for each petrol pump separately, even though all the petrol pumps were covered by one individual contract. Next, combining of contracts. See, there can be an opposite situation where you have a group of contracts. That means you don't have one contract, you have multiple contracts with the same customer or with different customers. And what may happen is, if you see the commercial reality of the transaction, you may find that even though on paper there are multiple contracts, actually the subject matter of all these contracts or the commercial reality of all these contracts is that they are a single contract. So in such cases, we are not going to see the legal form, we are going to account for the subject matter of the contracts, we are going to try to capture the commercial reality of the contracts by treating all these contracts as one contract and applying the requirement of the standard to all of these contracts treated as one contract. That is called as combining of contracts. Okay. Now when will we do that? We see that the group of the contracts is negotiated as single package. So multiple contracts have been negotiated as single package. Okay. And the contracts are so closely interrelated, interdependent in effect, that they are part of a single project with an overall profit margin, and then the contracts are performed concurrently or in a continuous sequence. So when these points are satisfied, we can say that even though there are multiple contracts, we would have to treat them as one single contract and apply the requirement of the standard. Okay, I'll give an example to understand combining of construction contract. So let us say there is a contract between a customer and a contractor for construction of a transmission line. So the transmission corporation has granted a contract to a contractor to build a transmission line to transmit electricity from the power generating unit to a substation. So they have to set up huge we can say power transmission towers, and they have to put those we can say electrical conductors, wires for transmitting electricity from the power generating unit to the substation. So that is the we can say the contract. See, construction of the transmission line. But if you see the contract which have been entered between the we can say the customer and the contractor, you will find that there are three contracts. Supply contract, that is contract to supply those tower parts which are required for setting up those huge towers, and supply of the conductors, that is the wires. Then erection contract. So you have to erect these tower parts into those transmission towers, and you have to pull those we can say conductors from one place to the other place, and you have to erect them on the transmission towers. And freight and insurance, that means the customer is also ready to reimburse the freight which is incurred for transmitting these tower parts from the factory where it is being manufactured and to the location where it has to be erected. And insurance, so during transportation, insurance is also going to be reimbursed by the customer. So if you see that If you see the contract, you find that there are 3 contracts which are entered between the customer and the contractor. Just because there are 3 contracts, we are not going to treat them as a separate contract. We are going to consider them as a single contract. Why should I do that? I'll just give you an example. If you read the supply contract, it says that the billing for supply portion, that means if you are claiming some money from the customer for supplying parts to the customer, the contract says that only when it is erected, you can get payment for the parts which have been supplied. That means these are interlinked. So you cannot get payment for the parts which you are supplying unless you are going to erect it. That means these contracts are interrelated, they are interdependent, they have to be done simultaneously, concurrently. That means you have to supply and also erect. And that means these are interlinked. That means if you cannot get payment for the parts unless you erect. That means these contracts are interrelated to each other and intertwined. In such a case, it is pointless to treat them as separate contracts. We are going to combine them and treat them as one single contract. That is an example of combining of different contracts. Next, construction of an additional asset. Sometimes the construction contract may provide for construction of an additional asset at the option of the customer, or sometimes the contract is amended for construction of an additional asset. Now, the customer wants the contractor to let us say construct an additional asset. Let us say the last example. The customer initially asked the contractor to build a transmission line. That is, work is completed. Now the customer wants the contractor to build a substation now. Now substation and transmission line are not same in terms of design, technology, function, etc. And the price of the substation would be negotiated without any connection with the contract price for setting up of the transmission line. In this case, this substation construction is considered as a separate contract instead of being considered as the same contract. So that is what we are going to discuss here. So when the asset differs significantly in design, technology, function from the asset or assets covered by the original contract, the price of the asset is negotiated without regard to the original contract price. In such cases, the additional asset which is being constructed will be considered as a separate contract. The requirement of the standard will be applied separately to it. Now, we will talk about contract revenue for the construction work which the contractor is doing for the customer. What is revenue? So, as per the standard, contract revenue shall comprise of initial amount of revenue which is agreed in the contract. So, based on the contract, whatever is the initial revenue agreed between the customer and the contract, that will be considered as revenue. Apart from that, variations in contract work, claims and incentive payments. So, these amounts will also form part of contract revenue. So not only the revenue which is agreed in the contract, sometimes variations of contract work, claims, incentives will also form part of revenue. Now, when will variations in contract work will form part of revenue? When can you include claims as part of contract revenue? When can you include incentive payments as part of contract revenue? What is what we are going to discuss in the next slide. Now, variations in contract work. Now, what is variations in contract work? These are, we can say, changes in scope, design, specifications which are instructed by the customer. So customer is giving you instruction to change the scope of the work, change the duration of the work, change the design which he had given initially. So if there are some variations which are required by the customer, the contract will definitely have to incur some extra cost to meet these variations. So in such case, would like the customer to reimburse him some extra amount. So would like the customer to give him some extra amount apart from the initially agreed revenue. He is asking for extra amount because there have been some variations from the initial contract. So in such cases, variations for contract work can be included as revenue only in 2 cases. One, it is probable that the customer will approve the variation. Customer has to approve the variation, and he also has to approve the amount of revenue arising out of the variation. And second is the amount of revenue can be measured reliably. So when these 2 points are satisfied, only in such cases the revenue for variation in work can be considered as part of contract revenue. Till that day, we cannot include as part of contract revenue. That means the customer, it should be probable, more likely than not, that the customer is going to agree for the variation. He is also going to approve the extra amount which is payable for variation in work, and we are able to measure the amount reliably. When these conditions are satisfied, variations for contract work, variations in contract work can also be considered as part of contract revenue. Next, claims. What is a claim? This is an extra amount which the contractor seeks to collect from the customer. So this is an extra amount which the contractor is seeking to collect from the customer for costs which are not reimbursable as per the standard. So I am incurring some costs. These costs are not reimbursable as per the contract. Now I seek to collect these amounts, extra amounts from the customer. Such amounts are called as claims. When will claims arise? Because of customer cost delays. Customer is not able to give possession of the land on which I have to construct the work. or the customer has not been able to arrange for, we can say, relevant permissions for continuing the activity. I am ready to do it, but I am getting delayed because of delays on part of the customer. Faulty specifications or designs, he has given some faulty specification, faulty designs based on which I am doing the construction activity, and during the construction activity we find that the design is faulty and we are required to stop the work and we have to change the design now. It will incur some extra cost for the contractor, which he would like to reimburse from the customer, he would like to claim from the customer. Such amounts are classed as claims. Now, revenue from claims is uncertain and depend upon outcome of negotiation. Hence, when can we recognize revenue from claims as part of contract revenue? We'll see it in the next slide. Now, we can include claims as part of contract revenue only when negotiations have reached an advanced stage with the customer and it is probable that the customer will agree to the claim amount, and second is we are able to measure the claim amount reliably. So when these two conditions are satisfied, only then we can consider claims as part of contract revenue. That means negotiation should have reached an advanced stage and it is probable we have come to a stage where customer is going to agree for paying an extra amount to us because of his fault, and second is we are able to measure the claims reliably. Only in these two cases we can consider claims as part of contract revenue. Next, incentive payments. What is incentive payments? Sometimes these are extra amounts which the customer is ready to pay over and above the revenue which is agreed as per the contract. So these are amounts which the customer is ready to pay over and above the revenue which is agreed in the contract. Now, incentive payments would be paid by the customer to the contractor only if the contractor is able to meet or exceed the specifications that are given in the contract. That means he is able to finish the work within the time given, or is able to exceed the expectations of the customer. In such cases, the customer may agree to give some extra amount over and above the amount which was agreed in the contract. Such payments are called as incentive payments. Now, you can see an example here. Contract may allow for incentive payment to the contractor for early completion of the contract. Say, contract provides that if you are able to complete the contract within a period of 18 months, 5% of the contract value will give you as bonus, or 10% of the contract value will give you as incentive payment. So that is what we are talking about. Incentive payments can be included as part of contract revenue only when two conditions have to be satisfied. The contracts have, we can say, reached an advanced stage. We are in advanced stage of completion and very soon we are going to complete the contract, and it is probable that we are going to get those incentive payments and we are able to reliably measure the incentive payments. Only in those cases we can consider incentive payments as part of contract revenue. That means the work should have reached an advanced stage and very soon we are able to complete the contract, and we know that it is probable, more likely than not, that we are going to get the incentive payments and we are able to measure the incentive payments reliably. Only in these cases we can consider incentive payments as part of contract revenue. Okay. So in this lecture we discussed about different types of contracts, what is considered as contract revenue, what is variations in work, what is claims, what is incentive payments, and we learned about the various definitions which are used in the particular standard, and this was what we want to discuss in this particular lecture. Thanks a lot.